Thanks very much. It's a great pleasure to be here and to share some thoughts with you in a brief period of time about the global economy and how the UK and this industry will be performing within it. I want to start with this slide, which I always put at the beginning of my presentations, which just highlights that despite all the turmoil and difficulties that we've seen in the global economy over the last 5, 6, 7 years, we are basically in a global economy that's growing. It's already about 20% in dollar terms ahead of where we were before the financial crisis. By the time we get to 2020, if you believe the IMF's forecasts, we're going to have a global economy that is 3 times the size in dollar terms that it was in 2000. So the impression that you get from the financial press, particularly the Financial Times and its lead opinion writer, Martin Wolf, that continually we're on the edge of a doom and gloom and decline, is a slightly misleading picture. There are a lot of growth opportunities in the global economy. But how different parts of the global economy have been performing obviously depends on where you sit. And the big picture story, to my mind, in the global economy over the last 20 or 30 years has been the emergence of the Asia-Pacific region with the large economies of China and India, Indonesia and others, as the largest single region and becoming the dominant region in the world economy. And while the United States and Europe are still substantial players, many of the things that we see happening in the world economy are now increasingly driven out of what's happened in the Asia-Pacific region. And there are downsides to that. We've had upward pressure on food and energy prices, which has subsided recently, but that was a product of strong growth in Asia. But it's also an opportunity. It's a market which we can sell into. And this chart actually understates the size of that market. In terms of GDP, the Asia-Pacific region is about 1/3 of world GDP. In terms of population, it's over 60%. So this is where the bulk of the world's population lives. And as we roll forward through deeper into this century, it's going to become increasingly clear that this is the dominant region of the world economy and a massive market and massive opportunity. And you can see from our forecasts, which we present in Carol Kirkwood style in the form of a weather map from PwC, that is reflected in strong growth continuing this year in China and India. Yes, there are signs of a slowdown in the Chinese economy, but most countries will give their eye teeth to have growth of 7% or so. The fact that it's not 10, 11 or 12% as it was a few years ago is a sign of the increasing maturity of the Chinese economy. And I point out to people that 20 years ago, the Chinese economy was worth about $500 billion. Now it's worth about $11 trillion. So even when it was growing at 10%, 15% on $500 billion, that wasn't as worth as much to the world economy as growing at 7% on $11 trillion. So Chinese and Indian growth are very important drivers still for the world economy. But the other thing I would focus on in this chart is what's been happening in the major Western economies. We've come through a global financial crisis that's sometimes called, if you get outside the West, the Chinese call it the North Atlantic financial crisis. They don't see it as a truly global phenomenon. They see it as affecting the Western economies on both sides of the Atlantic. But you can see now in the more northerly parts of Europe and in North America, we're seeing signs of much better growth. And we had news today about the UK economy, that not only has the growth been revised up for the most recent quarter, in Q1, but also for last year. The UK economy is performing as one of the better economies in the Western world. There are trouble spots, and we've been hearing a lot about Greece, and you can see on our forecast we expect the Greek economy to contract by over 1% this year. I think, given what's happened over the last couple of weeks, that may be an overstatement of how well the Greek economy is going to do. The minus figure could be bigger than that. I think from a travel and tourism point of view, this is a bit of a sort of mixed blessing. Some of our markets in the rest of the Western world are doing quite well. But countries that are struggling, like Greece and Italy, are going to be trying to lure tourism in their direction and trying to compete themselves back into the market, irrespective of what happens in terms of Greece and the euro. So there's going to continue to be quite a strong competitive challenge. I was struck by the number of business conferences that I've been invited to taking place in Greece over the last 12 months or so. So from a hospitality and tourism point of view, the northern markets are providing opportunities for us. The southern European markets are providing more of a competitive challenge. And you can see that in terms of the most recent growth figures for the European Union economies. These are the 10 largest European Union economies, and that's why Greece doesn't feature on it. Greece is only a very small part of the European economy. But you can see this north-south divide that I've talked about, with the exception of Spain, which is turning around. And if I'd had time to update this slide for the figures that came out today, the UK economy would have been the second fastest growing on these recent figures. So the UK economy is doing well, not just in absolute terms, but relative to our European peer group. Now, why is the UK economy doing relatively well over the recovery? Certainly not because the press has been talking it up, that's for sure. The prevailing mood for most of the recovery that's been going on for 6 years now has been fairly doom and gloom. The recovery has come despite, I think, some of the influence of the press. Nor has it been, as the previous government talked about, the march of the makers led by manufacturing. In fact, it's been the more successful services industries that have been leading this recovery. And at the top, I have to proudly say, as I now work for PwC, professional and business services, the star-growing performer in the UK economy. Obviously, we're providing professional and business services to a wide range of people, including hopefully many of you in this audience, and also selling them overseas. But in the top 5 sectors there, you've got transport and communications, which is an important part of what you do, and hotels and restaurants. So I think the hospitality and tourism industry are contributing to this growth story. And there's a great diversity of experience, as you can see, with the financial sector still, on average, dragging back the UK economy. Construction and manufacturing in the middle of the pack. But the stronger sectors are actually in the services sector. And I think we should be proud of that. Sometimes that's seen as some sort of sign of weakness in the economy. The services sector employs over 80% of the people in the UK economy, if you include the public sector as well. It is the dominant force in all major economies now. So we shouldn't feel ashamed of service sector-led growth. In fact, we should expect it to be the norm, and we should be trying to build on the success of the services sectors that are doing well. And just to add to that point, the UK is particularly successful in exporting services, in selling services to people overseas. And professional services and finance are part of that story, but travel and tourism is also part of that story too. Compared with other countries, we export 12% of our GDP in services. That's way ahead of the closest other countries in the G7, France and Germany. And it's 3 times the share in the United States. So services contribute not just through employment, through GDP, but also through trade, and we should not forget that. So just to sum up, what are the key issues that the UK hospitality and tourism industry should be thinking about in this environment? Well, first of all, we are always vulnerable to economic instability of various sorts. We've benefited from relative stability over the last couple of years. That's helped growth, both at home and abroad. I don't believe that the Greek situation is going to destabilize the European economy. It's going to be difficult for the Greeks, but I think we've probably insulated ourselves from it. But there is the competitive threat I've talked about. We're going to have an EU referendum which will create uncertainty. My belief is that the UK is better served by remaining in the EU and being able to tap the European market in its fullest sense rather than being on the fringe of it. We'll see, hopefully, that will be the outcome. The UK needs to be conscious of making sure it's an attractive business and investment location from the point of view of tax and regulation. And we need that transport investment. Boris didn't talk about airport capacity. To my mind, this airport decision is quite fundamental to the UK's position in the world economy and our ability to attract people. And the key thing I would emphasise is we have to get on with it. I worked at British Airways around about the early 2000s, and we were still in the same position then, 15 years ago, than we are now, just talking about it. Delivery has got to be the key thing in terms of the decision that's made in airports. Labour availability and skill shortages, I've already heard reference to that, and that could bring with it some wage pressure. And finally, when I was on the MPC, I was one of those who made the first call to say we need to start thinking about raising interest rates. It hasn't happened yet, but it really is coming onto the agenda. And I think business people need to be prepared for a gradual rise in interest rates, not as a threat, but a sign that we're getting back to more normal times. And it's not necessarily a bad thing. I think the more worrying thing to me will be if we continue to put this off, because I think in that circumstance, we could well find a sharper rise in interest rates in the future. So it's a bit of food for thought for the rest of your conference. Thank you for listening, and enjoy the rest of your day.